Hi guys, this is Zahir of Sublime Trading. This is your weekend Forex analysis. We have 4 pairs to get through, starting with the Aussie dollar US dollar. The first chart we'll start with is the monthly time frame in the top left corner. If we look at where price is in relation to the annual levels, this is the high of 2018, this is the low of 2018. We can see that price is trading inside these levels. For us as long-term traders, this is considered an area of consolidation. Ideally, we want to see price trading either above the high where it has a bullish bias or below the low where price has a bearish bias. Currently, we can see that price has been in a bearish move to the downside, but finding support at the low of 2018. We'd like to see this momentum continue to the downside, and if support levels are broken, we can then start looking for shorting opportunities. If we move across to the weekly time frame, we can see that price is trading below the 200 moving average. It's also trading below the 50 moving average, but overall it's in this area of consolidation. Price is just going sideways. And if we move down to the daily time frame, just open that up, we can see the consolidation in more detail. Price has pulled back to the 200 moving average, which is now acting as an area of resistance. We had price close as a tram-tracks formation, so a bearish tram-tracks formation at resistance could potentially mean an end to this pullback and a further move to the downside. Now, if we look at the history of the chart, we can see that price found resistance here. Didn't quite come to the 200 moving average, but potentially could have found resistance around this area based on this pivot level. And then we've had another bounce off the 200 moving average here. So potentially we could see another move to the downside with price bouncing off the 200 moving average here. Ultimately, because of the flash crash we had a number of days ago, we want to see price breaking close below this pivot support to suggest a continuation. The next chart we'll look at is the euro dollar. Again, the euro dollar is trading inside the annual levels of last year. It's bearish overall, looking for momentum to take price through the low of last year and then further weakness. Moving across to the weekly time frame, we can see that price is trading above the 200 moving average, where it's finding an area of support. We want to see price break through this and start moving to the downside. And if you come down to the daily time frame, we can see that price is below the 200 moving average, but overall the market is in this area of consolidation. Once price breaks through the 200 moving average on the weekly, price will then also be below the 200 moving average on the daily. We'll have alignment between the weekly and the daily time frame. And once price breaks through the low of last year, we'll have a bearish bias across all 3 time frames. We can then start looking for shorting opportunities. The next chart we'll look at is the pound dollar. Also trading inside the annual levels of last year. Bearish overall, finding support at 2018. We had a bullish January, but as the overall trend is bearish, we want to see momentum to the downside and then further weakness towards this 1.2 zone, and then for price to clear and then move further towards 1.10. If we move across to the weekly time frame, we can see that price is trading below the 200 moving average. We've had a pullback to the 50 simple moving average, and we had a move down last week. We could potentially see further weakness, or if price continues to the upside, then the next area will be the 200 moving average as resistance. If we come down to the daily time frame, interesting setup on the daily time frame. We've seen a pullback take price through the 200 moving average on the daily. It's coming back to retest this as support. Now, there's 2 movements likely that could happen here. The first one is a bounce off the 200 moving average, take price above this high point and then a move towards 1.40. Or this could be a head fake where price has come up above the 200 moving average, broken above it, traded above it for a number of days, and then could make its move back down again. This is a waiting game now to really let price dictate which direction it wants to go in. At the moment, this is very much in no man's land and a currency that we want to stand aside on. The final currency we'll look at is the dollar yen, also trading inside the annual levels of last year, very much in an area of consolidation. On the weekly, trading below the 200 moving average and the 50 moving average. If we come down to the daily, we can see that price is very much in this area of long-term consolidation, and that's because there was a big move to the downside. Then we had that flash crash from a number of days ago where price found support at this level, bounced back up again, and since then has really been in this area of consolidation. So overall, looking at the foreign exchange market, we can see all of these currencies are in areas of consolidation. We need to see levels broken before we can start placing trades. For now, the smart option is to stand aside and wait for the market to dictate a clearer trend direction. Thank you for watching, guys. Don't forget to hit the subscribe button and set your notifications on alert, and also click on the link in the description below to join us on our live webinar where we share more on our trend trading techniques, our verified results, and joining our community.